If we look as of December 2024, the major economies like the US, Europe, and Japan are still in an inflationary boom. So in this kind of environment, equities and gold should outperform. And the asset class to avoid in this kind of inflationary boom is fixed income and in a way also cash. So I guess that until these economies stay in an inflationary boom, investor can still remain invested in equities. But of course, the risk going into next year is that with a new president coming in the US and a new fiscal policy to be implemented in the US, this could bring the world into an inflationary bust. And if we move into an inflationary bust by mid of next year or later, 2025, in fact, investors should start to reduce their allocation to equities and increase their allocation to real assets like gold. I think here we need to differentiate economic growth and the potential of performance for financial assets. It's not really always moving in sync. So in terms of economic growth, I think that countries like India and some countries in Asia are expected to have better economic growth than the rest of the world. But as I just say, since we will have a new fiscal policy to be implemented in the US under the new president, I mean, this also could push economic growth in the US. In terms of financial asset, if the new US president implement his fiscal policy, which is basically founded on tariff, I mean, this is kind of inflationary, so this should favor equities and once again real asset until the world moves from an inflationary boom into an inflationary bust. There's clearly a shift, especially in the global south and in Asia, because more and more investors are worried of the weaponization of US dollar assets. So this has explained that institutional and also private investors have increased their allocation to assets like gold or silver or physical asset that they can store domestically. And on the other hand, clearly also with the implementation of these new fiscal policies in the US, you could have potentially a rotation intra the stock market, meaning that we could see a rotation from the technology sector, the IT that has outperformed over the past 2 years into the more traditional sectors like energy and industrial, which will benefit from reshoring into the US economy. There's clearly a shift. I think that the last year has been all about AI in financial markets. AI still have to be implemented for investor, but there's a huge potential for the financial service industry to use AI and help investor as well as advisor to deliver a better service to their customer. So I think that this implementation of AI into financial service will take place in 2025 and beyond. And this will, of course, provide a lot of efficiency gains for the industry. Well, I'm delighted to be one of the speakers at TSAM Singapore 2025. It's a great honor for myself, and I'm looking to connect with more professionals from the industry as well as to improve my networking in Singapore and outside Singapore.